on account of strong consumption baskets. They say grocery, fashion and lifestyle maintained their growth momentum. Consumer electronics had a steady performance despite festive season falling in the third quarter. Remember, we had the Adhik Maas and Shravan factor coming in as well. And we did see them open 71 million square feet of additional storage space in this quarter. The store footfalls were close to 260 million. And the total store universe for Reliance Retail now stands at 18,650. They added 471 new stores during this quarter, and digital and new commerce contributed around 19% to the revenue. Karan was speaking about how Tira has been launched as well, so their beauty business also adding to their overall retail business. All of that doing extremely well. I mean, it looks like the retail business will be the marquee business of the company. In a lot of the annual general meetings, the chairman has said that he is looking forward for retail to be the biggest contributor to the company in terms of revenue and EBITDA too.
Okay, so it's both the consumer-facing businesses, right? A stellar growth in the retail business and stable growth in the telecom business is something that are the cornerstones of the performance this time around. The net subscriber addition has also accelerated. Jio has now added an industry-leading 11.1 million subscribers during this quarter. And the average revenue per user, as we told you, has increased 2.5% year-on-year, coming in at 181.7 rupees. This is driven by both a better subscriber mix across mobility and the wireline, partially offset by the start of the 5G services. Naveen Kulkarni, in fact, is also with us to talk more about that. Naveen, your thoughts? This is, a beat almost on all counts for Reliance Industries, but particularly on telecom, your thoughts?
Yeah, so we were expecting an ARPU of around 182.5. So overall, the numbers look in line, but I would say the subscriber addition has been stronger than what we anticipated. So that's a key operating metric which looks quite strong. EBITDA margins, of course, more or less in line. Mind you, Q2 is not seasonally the strongest quarter for telecom industry. In that, considering that environment, the QOQ numbers look strong. The subscriber additions look very strong. So overall, I would say Jio numbers continues to trend very much on a strong growth trajectory.
Also, I wanted your thoughts, Naveen, on how you're approaching the stock now, because the stock, still has some headroom. Perhaps it's down about 20% from its 52-week high. Given that these numbers on most parameters are better than what the street was expecting, except perhaps the average revenue per user, as you said, which you were expecting to be higher. But do you think that there is some more, there are more levers for the stock to move higher in the near term?
Yeah, so if I were to look at overall industries from a valuation perspective, currently I would say that at these levels, the stock looks slightly undervalued, considering the stock has corrected almost 20%, and even at the 20% higher levels, it was not in the expensive zone. If I were to break it down, the retail business is roughly around $100 billion business, and then, of course, Jio is also a very, very substantial business, considering it should be in the range of around $70 to $80 billion. And then, of course, the O2C and the other businesses are also very, very valuable businesses. So from that perspective, I would say that from the current levels, the stock seems to be not fully valued. There is, I would say that at least 10 to 15% discount from the fair value levels that I tend to see from current levels. Of course, it remains to be seen that whether there will be further upgrades in earnings or not. But overall, intrinsically, I feel the stock is undervalued at current levels, and there is more upside in the offering.
All right, most upside in the offering is something that the street would take, given its weight on the index. We also see a bigger upside on the Nifty, were Reliance to move. But coming back to Prakash, also Prakash, a word on the oil to chemicals business. Yes, year on year, there has been a decline in the revenue, but that's largely on account of a 14% reduction that we've seen in crude prices. The important part is that the segment EBITDA has grown by 36%, and that's on account of the strength that the company has seen in the gasoline, PVC, and optimized feedstock sourcing that they're talking about. 16,000 crores is the EBITDA that's the company has reported in the O2C business, a business where the EBITDA is more important than the revenue, because that's just contingent on the realizations of the commodity price itself. This is still a large EBITDA contributing vertical to the company. Your thoughts on the environment here and how one should look at this business?
So, that's an interesting point that you make, Mandap. The EBITDA is grown primarily because of, the maintenance of the EBITDA growth is primarily, I think, attributable to volume growth and not just price realization and things like that, which can be fairly volatile. The way to look at this would be while retail and Jio start getting the company far bigger growth and accelerated growth, the O2C business starts forming providing the backbone to make sure that it's a steady state business that keeps on coming, which is almost right now 50% of the revenue contribution. So I see if that EBITDA percentage keeps on getting maintained while the Jio Air Fiber and the Jio Space Fiber and the retail vector starts working, that's going to be the ideal combination. So what is it as a company that it could offer? A very solid, strong backbone of O2C, steady business, globally mapped, globally, potentially growing, and Jio and retail to kind of, start offering you the new age consumer-facing business, as Sonia also rightly put. So that's the kind of expectation that the market will start building from O2C and not expecting too much of investments going into it and worry about too much of return on capital to be maintained from there on.
Just a word on the volume growth. He said that despite the realization decline, there has been a volume growth. The company has given some details. There was 66% growth in KG-D6 volume, and that improved the oil and gas segment earnings. At the same time, they also, saw incremental production of gas and condensate coming in from the NJ field as well. So those are a couple of things that did well for their oil to chemicals business.
Okay, for their oil to chemicals business, I also wanted to make a mention on the telecom business. So while Naveen Kulkarni was also making this point that the average revenue per user, the expectation was 182 rupees. It's come in at 181.7. So maybe this slightly lower than expectations. The bumper number is really the subscriber addition. It's much stronger than what the street was expecting. And I was calculating if the subscriber addition has gone up 21.7% quarter on quarter. So this time they've added 11.2 million subscribers. This compares to an addition of 9.2 million last quarter. Naveen, this is really much better than what the street was estimating perhaps, and the subscriber base is now at 460, almost 460 million. How are you looking into it? Would you expect the company to build on to this number? And would you raise your earnings estimates, particularly for Jio, based on what you've seen this quarter?
Yeah, very likely, because see, the environment that we are in, telecom subscriber additions have been hard to come by. We are not in the 2010 kind of a scenario where adding 2 crore subscribers or 20 million subscribers was not that difficult. Right now, in this kind of an environment, a subscriber addition is rather difficult, and Jio adding close to 11 million subscribers is a very, very strong number, and that too in a quarter which is not the strongest quarter of the year, right? So I think overall from an operating performance point of view, this is a very, very strong quarter for Jio. ARPU number can move up and down, plus minus 0.5% miss is not very, very significant, but overall the ARPU, the subscriber addition and margins being maintained on a sequential basis says a lot in terms of how Jio is shaping up in terms of the overall growth trajectory.
Okay, very strong quarter for Jio on the back of the subscriber addition, the net subscriber addition going up quite a bit. Karan Taurani, I wanted your thoughts on, in the retail business, as Mangalam was telling us, very, very strong growth is what we've seen. The retail revenues itself, almost 10.5% growth, now sitting on a base of 77,000 crores of retail revenues. You were talking about how they have many, businesses that are sort of coming up in a big way, whether it's something like a Tira, which is adding to their profile now. Do you think that these margins of almost 8% and this double-digit growth on the top line is something that Reliance can maintain in their retail business in the second half of the year as well? And would you scale up your earnings estimates for the full year?
Yeah, so I think if you look at the growth rates, I think the growth rates will amplify in the second half because of festive season. I think this is, that despite the Shraddha season and the Adhik Maas coming in, they have been able to maintain these kind of growth rates. So I think because of festive, the momentum will accelerate. I think fashion lifestyle will be the biggest driver here. White goods also, you see growth rates accelerating from 13-14% range more towards 18-20% in the second half. So I think there is a potential, for some sort of an earnings update as far as retail numbers are concerned. But again, just to add on the telecom bit, I think the subscriber addition is also coming because of 5G. I think in terms of 5G adoption, in terms of having the largest 5G base today, Jio has been the most proactive, and they've also got the first advantage, versus peers. So I think even this is kind of playing out as far as subscriber addition is concerned. And the second driver for the subscriber addition is also people moving from 2G to 4G. Because even that is one of the intents that the company has actually panned out. And if you look at the average quarterly subscriber addition, 3 to 4 quarters back, it was around 5 to 7 million subscribers, which has now come to almost 11 million plus subscribers. So I think there is ample amount of growth there, and I think ARPUs will kind of come over the medium to long term basis, once they have a larger chunk of the market, because as I told you, they've got a very strong hold on the entire content ecosystem. So I think ARPUs will come by. It is now only about getting a larger chunk of the entire market.
And Reliance always seems like a company which is forever on a growth path, because this quarter itself they did a capex of close to around 38,800 crores itself, most of them internally funded. And speaking about the retail business itself, Karan, I was looking at some of the internals out here, and they are extremely strong. Consumer electronics grew at around 11%. You said that it would be fashion which would have led the growth. Yes, indeed, fashion and lifestyle is up 32%. And we have RGO, which has grown by about 50% year on year. Grocery itself hasn't done too badly. In fact, in a quarter where, people are looking at downtrading or smarter, cheaper options, Reliance Grocery has delivered a quarter of record performance with a 33% growth, led by Smart and Smart Bazaar formats, largely because of the value offering that these, channels did for the company. To add to that, they've also made a couple of acquisitions. They, during the quarter, bought the IP of Superdry in a couple of neighboring countries, India, Sri Lanka and Bangladesh, and also acquired Edamama, which was a kids and maternity brand. So with this and the 15,000 crore fundraise that they've done, it looks like they're not only on a massive growth path, but it's growth path on a high base as well. So 77,000 crores of the revenue that they already do in a quarter, which is much more than the industry combined in an entire year. And add to that, you have all these guns which are still waiting to fire.
Absolutely, absolutely. So, I just want to get Abhijit Bora into the conversation as well. Abhijit, if you had to summarize everything for us, right? I mean, it's a beat on most counts for the company. The growth in the retail business is stellar this time around. There's a stable growth in the telecom business. In fact, the net subscriber additions, as we've been mentioning repeatedly, is very strong. And the company says that by December of this year, they will complete their pan-India rollout of 5G services as well. Given all of this, what kind of an upside do you see on the stock? Because as we've been mentioning, the stock is still down about 20% from its 52-week highs. What's your target?
We have a target price of 2880 currently. And given the underperformance, we expect that post such a stellar performance, there will be some catch-up in the stock price in the near term. And the important thing is that long-term consumer growth drivers are intact for the company. Even the Jio Financial Services, once they ramp up, they will create a long-term value there also, apart from the retail and Jio business. So consumer basket will grow. So we are quite optimistic in terms of overall growth potential for the company. And we have a buy rating on the stock.
What's your target price, Abhijit?
2880.
2880. All right.
Okay, 2880. And what about you, Prakash? Just before we wind up, any final thoughts on the numbers, the target price on the stock, and how do you see the stock open on Monday?
So, Sonia, as I said, while the catch-up might not be just a day-long affair, it would take some time. Remember, retail is moving very quickly, moving to justify a valuation which is definitely upwards of 8 lakh crores in market cap. We've seen that as the market cap, deemed market cap for all the investments that have come in the second round. But I would believe if you were to attribute about 8-10 lakh crores of market cap to retail at Jio, Reliance as a company is available at just about 15 lakh crore market cap. So there is definitely a huge catch-up. I think at least a 20-25% kind of a catch-up. Now that could take 3 months, that could take 6 months. But I think the under ownership will trigger, with these kind of numbers, the under ownership will trigger a lot of interest in playing it safe. And remember, this will happen once ETF money also starts coming back, given the kind of weightages that Reliance has. So all that, subject to all of that getting timed well, I think the stock would move back to those 28,900 levels by December end itself.
Should we call it your Diwali pick then?
It's always been one of the favorites. It's something which stands the test of time, given the kind of huge scaled-up growth that they always look for. I mean, it's not just like a hesitant player that is trying new things out. It's so decisive that it's really impressive. Retail, by the way, is number 9 or number 8. I'm not too sure with the global ranking. You have a global business available to you at such low market cap. You can't miss it, whether it's this Diwali or the next couple of.
All right, gentlemen, thanks a lot for joining in and helping us understand the numbers. Prakash, Abhijit, Karan, Naveen, thanks for being with us and have a great weekend. So those are Reliance Industries numbers. Just to summarize how the numbers have been, it's a beat on most parameters. Earnings are better than what the street was estimating. The star of the show undoubtedly is the retail business. So it was a stellar showing over there, 10% growth in the top line for retail business, margins coming in at 7.4%. Stable growth in the telecom business as well. The average revenue per user has increased 2.5%, but it's the subscriber addition that is very, very strong this time around. Jio added an industry-leading 11.1 million subscribers in this quarter, and the management says that by December of 2023, they will complete a pan-India rollout of the 5G services. Overall, the numbers are on your screen. Thanks a lot for watching this special coverage. We'll be back in just a minute.